Okay, welcome back.
I'm here to tell you right now, we don't care.
Let me tell you something.
We don't care.
And let's get straight into this. So let's look at the signals for Wednesday, 6th of March. So as you can see on X, that I've posted the signal at around 12:10 p.m. And this is a short zone that we're looking at. So we're looking to short the market here. So let's have a look at TradingView. Okay, as you can see here in TradingView, around 2:10, that's when I posted. We're looking to short. As you can see here, the red area that we're looking, this is the area that we're looking to short into. I'm gonna class this as a definite loss.
Come on now, dog. Come on, man.
As that market would have made a little bit higher, I would have looked at that. But again, okay, you could have made a quick scalp, but we're not looking for anything less than probably, I'd say, 1 to 4, 5, sometimes rarely 3, but we're looking at 1 to 4 or 5 because that's our magic number to ensure that we are making money in our trades and cutting our losses quicker, sort of thing. So that's the key. Yeah, it's the risk reward. I'll repeat that, and I think I said that in the previous video. It's the risk reward that's going to sort of ensure that we come out winners in this game. Okay, another reason also what I want to look at is why I wouldn't got into these trades again. Sometimes you look to re-enter, but another reason why we wouldn't look to re-enter these trades, if you have a look here, the market is making higher highs and lower highs. So even on a 1 minute time frame, you can clearly see they can draw maybe a little bit of a trend line as well. And you can see that the market is is moving in an upward fashion, sort of thing there. So you'd like to see the market sort of do the opposite, really. You don't want it to make new highs and lower highs as well. So I definitely would have re-entered, but that would have been one trade I probably would have entered, and it definitely would have been, I'd class that one trade as lost. But like I say, I don't think I'd have re-entered any more trades here. I'd definitely class that as a losing signal. Okay, then we posted again on X, with scalping. Don't forget about scalping, so there'll be multiple posts that we'll be putting out on Twitter. So the next one you can see, we are looking to go long. So we posted that about, I think, 11 p.m. on the 6th of March. And let's flip over to TradingView. Okay, so here on TradingView, you can see, the time that I posted it on 11 UK time, just a couple of hours before the market opens. And, I think there was a little bit of news out as well around 1:30. So, we went for a long position here. So, that would have been, towards the lows of the Bollinger Bands, that's where, potentially we're looking to go long. And as you can see here, the slight bit of breakdown that we're seeing in market structure here is the market's not making any more highs here. It's making some lows, so it's a nice area to potentially to get in at these lower Bollinger Bands. And as you can see here, in this blue area that we sort of outlined that we want to be in a long position here. You can see the upward trend would have been about 56 pips. So risk reward, we're looking probably that would have been 1 to 4 easily, and that would have been a nice trade to close out just before the US Open, I would have said. So you could have stayed in that one, but if you're getting 1 to 4, remember we're scalping. So if you're getting 1 to 3, 1 to 4 mostly, 5 we're looking at, 3 rarely, but 4 and 5 is what we're looking at. So this I would have sort of classed as a winner, and you could have had multiple other entries here as well. The market is starting to make it, eventually is making higher highs again. So a bit further down with tight entry, stop loss again, risk reward. You could have got in aggressively, and you could have come out with a winner. And the key is in this is if it's a buy zone, it's just to ensure that price is gonna end up going in the direction eventually that we want it to go in. So that's the key to this. So the key is that we're in a zone that we expect price to continue. There are losses, that's the nature of this game, but the risk reward will two things: the direction, and then the risk reward to ensure that we come out as winners. Okay, and then the final one we stuck out there on Twitter a couple of hours later again, around 3 p.m. UK time after the US Open. We said a short zone, so we are looking to short the market. So if we flip over to TradingView, and let's have a look at TradingView. So you can see there's some time before. So let me explain this element here, right? So there's some time between the signal in this instance that we ended up still in the short direction. So the time here that I put on the timeline, I think it's slightly wrong. Is 15:11. It should have been 15:02. I think it was on X. So, again, I don't think I would have entered a short. I'd wait for the market to pull back. So that's when I'm looking. So if the market just after that, the market pulled back, I would have looked to re-enter a short position. Obviously, that would have been a loss. But as you can see, after that time again, the market is starting to make higher highs and lower highs. So there is a breakdown in structure around 16:30 p.m. 4:30 UK time, where again potentially I would have looked at to short the market again. So that would have classed as a losing trade as well. So 1, 2 trades there, and now again as the market moves higher again, so you can see the breakdown of structure here again, where I've highlighted the red area. Now if you have a look at that, that's 186 pips, right? So again, I would have shorted the market around those highs again, where it's breaking down in structure and not making any more highs, and that would have been a nice risk to reward in terms of, if you're looking at again 1 to 4, we're looking at 15 pips probably in terms of entry and stop. So 1 to 4, 1 to 5 easily, and if you look at it, it's 188 pips. So do the maths. If you could have managed or would have managed to trade a bit in this instance, I think this one could have come out to be an extremely good risk to reward in terms of a bit greater in terms of 1 to 5 if you want to manage the trade element. So I normally aim for, like I say, repeat this 1 to 4 around that 1 to 5 mark. So yeah, so I'd class that as a winner.
Pow!
Okay, so in summary, we had 3 signals, 3 losses and 2 wins. So last time I tried to do a bit of explaining in terms of what your win percentage would have been, and it weren't quite the exact maths that I sort of gave. So I'm going to break it down for you here. As you can see, I've got a screen grab here. I've done a little bit of work in Excel. So if you've got a starting balance of 1,000, so you can see the first loss, starting balance of 1,000. We risk 2%. The risk value, the risk reward for this one, and it's a loss. And then we're at this total at a loss. So again, the second was a win, but you can see here the win. I mean, you're up 5.8% or just above 5%. That's a good day, I think, if you're up 5% on a day. And the other one again, you can see a loss and then a loss follows, but you can see the last one again. It's based on whatever you're going to risk, and we're like I say to you, we're looking for 1 to 4, 1 to 5. So the key is the risk reward ratio. You want a much higher risk reward ratio so you can handle these losses. So you can see the last trade is actually we were at like I say about 5-6%, 5.8 if you want to be a little bit accurate. But you can see if we take those trades, and the last one really, even though we were looking at a risk reward, we're going for I've been conservative. I said 4, so we took the 4. So you can see here we ended up about 9% or just above 9%. But on that one, if you trade manage as well, that risk reward for the last trade would have been greater. So it's just what your appetite is for risk. So
what is he doing?
He's beginning to believe.
Thank you. I hope you've enjoyed this one. I'll be posting a few more videos, and the signals are always on X, so keep an eye on X. You're likely to see that, and I'll continue to post on YouTube as well of the summary analysis, and I'll start to go into the trading strategy. So I'll post the signals and then go relating in terms of how I would enter into the trades, and also at the back of it I am looking to go live with this, so do bear with me. So thank you, enjoy, and I'll see you on the next one. Bye.